What will tariffs mean for metal and mining ETFs? Well, after President Trump said the US will impose new 25% levies on all steel and aluminium imports last month, ETFs in the metals and mining sector all surged. But looking at the biggest fund in this space, SPDR's S&P Metal and Mining ETF, XME, well, since that initial jump, it's really struggled. Todd Sohn is Senior ETF and Technical Strategist at Strategas. Todd, why have these metal and mining funds struggled over recent weeks after that initial tariff announcement?
Yeah, it's a great question. And I wonder if that was a little bit of a buy the news moment, but sell the more larger worries about economic growth. And I want to bring in what 10-year yields have done. They've come in a pretty good clip over recent weeks. And so if you're going to see metals and mining start to take leadership and really outperform, you likely need a stronger economic path or a runaway inflation environment. Neither of those seem to be the case right now. Again, inflation has lingered, and maybe we'll be in a second wave in the following year. But the market's concern right now seems to be that whether it's tariffs or another variable is leading to weaker economic growth. And I think that's starting to show up in funds like XME or the broader material space too.
Now, you mentioned their higher inflation, and there is a chance we could potentially see that happening with tariffs. These could help these funds, right?
You would think so. You would think that if tariffs are inflationary, they should lead to stronger performance for the more inflation sensitive areas, but the market hasn't necessarily bought into that. And so this is going to be a test of investor patience. They've waited very long for metals and mining and for broader materials to really work outside of, say, 2020 and 2021. But without clear path of runaway inflation, it's going to be extremely difficult. Meanwhile, you have so many other alternatives out there with 4,000 ETFs that I wonder if investors have kind of left the group alone. There's been outflows from XME over the last couple of years. And so I think it's almost a period where investors have thrown in the towel and moved on.
Now, in your notes, you mentioned that XME, even though it's been on a steady trajectory upwards for around 5 years now, it's yet to reach its peak prior to the financial crisis. Why in particular is that significant?
Right. So if we think about the last 15 years in investing, it's been a very strong market for large cap stocks and large cap growth in particular. And not even just large cap growth, but many corners of the investment universe, especially within ETFs, have all surpassed their 2007 financial crisis peak, right? So investors who may have bought $1 worth of exposure at that high have made money. But when you look at XME and even some of the energy related ETFs too, they're still below that high watermark set back in 2007. So you're still down on that position, or you really haven't made much money in the long term if you were to buy and hold investor in XME. And I think that can be really frustrating, especially when I look at large cap growth or other corners of the market that have gone on to generate great profitability. And so it's really rare to find an ETF like XME or another asset class that hasn't surpassed that structural high yet. And I think that's a source of frustration for investors.
In your notes, you also talked about AI being one of the latest trends. Perhaps another one is rare earth metals. There's one fund heavily focused on this, that's VanEck's REMX. What do you make of this ETF?
So REMX to us is a derivative of China, right? A lot of the exposure there is from China. The rare earths, I think, are found in China and the Asian region. And so if you think China is about to grow on an economic basis again, really stimulate the economy, which they have tried to do over there recently, this would be my play for that. Now, the risk of this, though, is that many of the rare earths are used in electric vehicle production. And here in the US, we are seemingly moving away from EV after a push forward over the last decade of that. So the bull case is China really coming back in terms of an economic environment. But the risk, the bear case, is that EV is having a little challenging moment here for the broader automobile industry. And so that also hampers the ability of those stocks, I think, to actually rise here because demand is less.
And earlier you mentioned patience. Is that your overall sort of conclusion if you want to get involved in funds like XME or PICK?
Yeah, I think patience is great. I think that these are good vehicles to diversify a portfolio, especially if you're overweight technology or industrials or communication type growth stocks, right? XME is going to be one of the hedges to use against an inflationary environment. And so, yes, the patience, you don't want to be too overweight, but it does make sense to have in a very diversified portfolio.
That was Todd Sohn from Strategas. And that was your look at metal and mining ETFs. I'm Ramzan Karmali, and this is Reuters.